All right, we'll call our first budget meeting of the year to order. Councillor Garden Cole is running a little late. She will be with us shortly. Until then, I will attempt to steer the ship. So I'd like to begin by acknowledging that we are in Mi'kma'ki in the district of Sipekne'katik, the traditional and the ancestral and unceded territory of the Mi'kmaq people. East Hants further acknowledges the 50 African Nova Scotian communities whose 400-year history have contributed to the province's culture, history, and legacies. We are all treaty people. Are there any amendments needed to the agenda? Seeing none, I declare the agenda approved. So we will open with our presentation from PVSC, and we have Mr. Paul Baisley with us again, the PVSC Municipal Account Manager. So
Thank you, Your Worship.
Let me get your mic on here.
Thank you, Your Worship. And I think we're good. Pleasure to be here again this year and to go over the 2026 assessment roll with council. And I know you're starting your budget process, and it's an honor to be here to be the sort of the kickoff or the opening act for your budget deliberations or whatever. And I also have Dion Regular here with me today. He was here last year. Some of you will recognize him from last year. And Dion, you want to say just a few words? Or?
Sure. Thanks for having us. I really appreciate being here and taking the time to spend this evening. It's on now, yes.
So I'm going to run you through the first few slides, and I'm going to go through it very quickly because I know you've seen these slides before, and I know you could probably do the presentation in my absence. So I'm going to go through them quite quickly, and then I'm going to pass it over to Dion. Dion's going to go through some of the numbers. And by all means, ask questions. And Your Worship, if anybody wants to stop us along the way and you want to put your hand up and we're open to that, no problem whatsoever. So once again, just as a refresher, we're legislated under the Nova Scotia Assessment Act. We have a board of directors. Joe Feeney of Mahone Bay, Deputy Mayor Mahone Bay, continues to be our chair, and typically the board is made up of 3 or 4 individuals with municipal experience, typically staffers or retired staff from municipalities. And I know Tara McGuire from, for instance, down Chester, the CAO there, is on our board. And we also have private sector individuals, professionals on the board as well, usually 3 or 4 of those. And we also have 3 or 4 elected municipal officials on there, including your own Councillor Walter Tingley over here. So thank you for serving on our board, Councillor Tingley. We're not for profit, of course, and a corporation, and we'll move to the next slide. So what we do and what we don't do, I went through this last year. Our prime directive is to provide the assessment roll to all 49 municipalities every year. We don't have any authority whatsoever as far as taxes, tax rates, tax relief, land ownership, that type of thing. I know I had a question in Shelburne last night about area rates and how do we apply that to the assessments and everything. And I said, well, I won't answer that because that's your responsibility. I won't have an opinion on that. So, things like area rates, tax rates and all that, that's all under your purview. And we just do the assessment and we focus on that. Next slide, please. So the base date, you've heard me talking about market value before, and the market value date, well, the base date is the market value date, and we're 1 year retrospective. For the 2026 roll, you'll see in that blue box on this slide that the base date, the market valuation date, is January 1st, 2025, essentially 1 year ago. So what that means is when we analyze our sales to see which way the market is moving or not moving, we look at sales typically from January 1st, 2024 through to January 1st, 2025. That's the cutoff. And then once we do our analysis, that's what the roll is based on for 2026. And the next slide, please. We have three approaches to determining value. I think you're quite versed in this. Certainly, sales comparison is predominant for residential properties. Income for those that are valued based on the income streams that they produce, such as hotels, motels, strip malls, office buildings, apartment buildings, those types of things. They transact based on the income that they earn. And the cost approach typically for, warehousing or industrial sites, those types of things where there's not a whole lot of sales that occur. Next slide, please. Sales data. We rely on sales data for a great, to a great deal in regards to the annual assessment every year. We receive all the sales data in the province from the land registry, and we look at all the sales to determine whether it is eligible to be included in our reassessment analysis every year. So what we're looking for are arm's length, willing buyer, willing seller, market transactions that would be reflective of the market. We use those in our analysis, and that tells us which way the market's going in the various neighborhoods around the municipality. Dion's going to show you some sales numbers here a little bit later here, but we look at them all, and if we have to talk to the property owners to get information from them, or the new buyers or the previous sellers, or we get a lot of information from the real estate listings, those types of things. We do inspections on properties that sell, use aerial pictometry, anything we can to validate and verify those. We called it qualified sales that are qualified to put in our reassessment every year. So we're under mass appraisal, we're trying to cluster similar properties together, the sales of similar properties, and then analyze them. Homogeneous type sales, similar neighborhoods. Ideally, we look at the ones that are similar, we can see which way the market's flowing on those properties, and we apply those market movements across the entire neighborhood. And let me see here. We use best practices, sometimes time trending. If we don't have enough sales, we may go back a year or 2 years and use time trending analysis to bring that forward into the current market. And I think we can move on to the next sales. Typically in the last few years, it's been 35,000 to 40,000 sales across the province that we take a look at and qualify for reassessment purposes every year. So the capped assessment program is still there, and we're not hearing anything to the contrary or otherwise. So you'll see in the green, little green bubble there, 2026 cap rate was 2.6%. That's a little higher than last year. You'll see the historic cap rates just under the green bubble there. Interesting to note, the highest by far was in the middle of the pandemic, or sort of that rate as the height of the pandemic was occurring. Now we're sort of returning to the more of a pre-pandemic norm, so to speak. So we're almost post-pandemic now, although there's still a few influences there. So it's based on consumer price index. It's set by it's StatsCan provides it to the provincial government. The provincial government provides it to us for the end of October. We get it usually in the middle of November, and we apply that to the assessments, and that's what, in the absence of any other changes to the property, if it's residential and eligible, it will go up by that CPI amount. If there's changes such as permits or property changes to the property, the physical characteristics, that will also be added to the assessment in addition to the cap. So, or if we're doing an investigation and we find that the physical characteristics are different than what we have, in our records, we'll update the records, and it may or may not be, a cap may or may not apply to that, and, you know, we'll make those determinations. So the box at the bottom, a typical notice, sort of what's on your notice for a typical residential property. In this case, the assessed value, which is the market assessment, so that's the market value, 226,000. The capped assessment in this case is much lower. They probably, you know, a property such as this, you'd probably glean from just looking at this box that this is, property's been in the cap program for a while. Possibly they've been in the program since it was automatic eligibility back in 2007. So the cap's half the amount of the market value, so they've got a fairly substantial benefit in regards to the cap. And of course, the lower of the two values is what the property is taxed on. So in this case, the 114 is what they would be taxed on, and what would be included as far as the municipality being able to tax those properties. If they are not eligible for the cap, that capped assessment box would be blank. So if your constituents are saying, I don't see my cap in the capped assessment box, have them call us, because essentially they wouldn't be eligible anymore. And we'll review it for them and tell them why it's not eligible. And if there's something that, you know, possibly that it would still be eligible, we'll make those corrections.
I do have one question. Councillor Mitchell.
Thank you. Just a question going back to the assessment process to make the assessments. So does a building under construction get assessed as it during that 1 year period? Or is that a end product?
Do you want to answer that one?
Sure, yeah. Yes, they do. We do capture, I call it interim values on properties, because effectively you're adding value to the property if it's site ready and, you know, a building is under construction. I mean, theoretically, if they were to walk away from that property and sell it for whatever reason, then there would be some added value that PVSC captures when the building is under construction, so yeah.
Whether residential or commercial or whatever?
Residential and or commercial, yeah. For commercial buildings, we have in what's called is a request for information we send out to help establish that interim value with respect to construction costs to date, that the property owners will report back to us to help them have a more accurate assessment. Right?
Okay, thank you.
So I think that's sort of, I'll wrap up the cap discussion and say that, you know, it's a topic that we hear a lot about, and we get a lot of questions from property owners, and you get the same questions. And so if you have any questions, come to us. We'd be glad to answer them for you. And with that, I believe I'm going to pass it over to Dion so he can walk you through some numbers.
Great, thank you, Paul. And again, thanks for having us here tonight. I'll just walk through some of these figures for the 2026 assessment roll. This slide right here, it reads from right to left. So as you can see, all the way to the right, the column for 2022 really shows the significant growth into 2026 over the past few years for the municipality. You're looking at a total assessment roll of just over $5 billion here for 2026, which is up about 11.5% over last year. Your residential numbers allocate about $4.6 billion of assessed value on there, which is just under 12% revision over 2025. And then you're looking at the subsequent row below that. The adjusted total residential with cap applied is at $3.2 billion, which is just under 10.5% increase over 2025. And then when you look at your commercial growth here, it's up about just under 16% for 2026 at about $416 million, about $57 million altogether over 2025 for your commercial growth. And the box all the way to the right, the green box there indicates that your total taxable value for 2026 would be at just under $3.3 billion.
Can I jump in?
Yeah, absolutely.
there,
Paul, go ahead.
I meant to talk a little bit in the preamble about how things look across the province or whatever,
Okay.
but essentially you probably read some of the media releases talking about, you know, we've exceeded the assessments have exceeded $200 billion for the first time ever. And some of the media reports were talking about that being driven by HRM and so on and so forth, which is quite often the case, but not the last couple of years. This year it was really driven. That ripple effect from the pandemic has spread out. And those municipalities outside of HRM are getting the advantage of that ripple effect and higher growth. And it's also a factor of affordable housing, people looking for affordable housing that can't afford it in, the urban areas of HRM. So, and the CFO asked me beforehand as to how do we compare. And so Dion gave you a number for the residential lift. He gave you a number, what was the percentage, or 12 or under 12?
For total residential, it's just under 12%.
Yeah, HRM was at 7.7% for residential lift. Areas such as Cape Breton, 10.68, close to 11 for Cape Breton, and South Shore is a little over 9%. So you see that sort of the outlying areas were a little more robust in the residential assessment growth. On the commercial side, yours was again?
Just about 16% here for municipality.
Cape Breton was almost 10%. HRM 7.84%. So you can see, sort of in comparison, East Hants and Stewiacke are some of the higher, some of the municipalities with the highest growth. And I think you all are aware of all the activity that's happening in this corridor. So I don't think it would be a surprise to you whatsoever. So I just want to throw that in there.
That's percentage growth. And
Yes.
12% of East Hants growth is still less than 7% of HRM growth.
Oh, it is, but it is certainly reflective of sort of a prorated, how do we compare to other municipalities?
And something I like to look at as well as I look at the 2022 numbers and how they've really expanded to 2026 in such a short window, I find it's quite impressive for the growth here in East Hants. So moving on to the next slide, we're just going to get into some of the details about the reassessment analysis. So the number of, Paul spoke briefly about the qualified sales. These are the sales that PVSC determines to be useful in the reassessment process. So here in East Hants, as you can see, the graph here, back in 2023 seemed to be the peak, and then it dipped off a little bit, and now it seems to be on an uptick again for 2026. So we're sitting at 717 total qualified sales to be used in the reassessment analysis for this year. And that's up about 14.5% over last year in the sales volume, which is great to see. And so the next, pardon me, the next slide, yes, is the number of building permits that have been issued in the municipality. As you can see, again, back when the pandemic years were underway there, it seemed to be at the growing and then dipped off again when things were, I think, very expensive to buy at Kent and Home Depot at the time. And then seems to be on the uptick again to 2025 here with 516 permits issued, up about 15% over a 2024 calendar year. Possibly could correlate to the sales where people purchase a property and then get a building permit issued to work on the home or the business that they bought, the commercial property. So on to the number of appeals received. As you can see, there's been a significant decline in the appeals from the 2024 calendar year into 2025. Again, the lowest was during the pandemic years, but seemed to increase in 2024. As you know, a lot of the properties that transacted really saw an increase in the market value. And PVSC is reflecting that market value and replicating that market value. So there was a number of appeals filed in 2024, which significantly down about 48% for 2025. And we've yet to receive the appeal numbers for 2026 this cycle.
Today, it was down about 20% compared to last year. But we still have till February the 12th
Yes.
to go. So some come in right at the last minute, so.
Yeah. So that's the appeals. So moving on to the appeal process I'll speak to here on the next slide. Yeah, so each property owner does receive a notice of assessment, whether commercial or residential property, which, as Paul indicated, the example of the property assessment notice here. This one would be classed residential taxable, and the assessed value with the capped assessment, as long as they're eligible, will be populated as well. And should a property owner disagree with their assessed value or the classification or the ownership, they may file an assessment appeal. As Paul just indicated, the assessment appeals must be received by midnight on February the 12th. And instructions on how to file an appeal are included on the assessment notice. And there are 3 levels of appeal to discuss with your constituents, if anybody gives you a phone call or if you would like them to redirect them to our office. Initially, the first level of appeal is the assessor will receive the appeal. And once PVSC catalogs all the appeals, then they will be all assigned to the individual assessors across the province for review, which is the initial level of appeal. And once that review is concluded, then if the property owner remains dissatisfied with that, the outcome of that appeal review, they can continue to the Nova Scotia Assessment Appeal Tribunal, which is somewhat of an informal process where there's an individual appointed by the province to oversee the meeting between the property owner and the assessment office, a representative on behalf of the director. And the third and final level of appeal is if again, the property owner, once the tribunal has concluded and they remain dissatisfied with that outcome, they can continue to the Nova Scotia Regulatory and Appeals Board, which is a more formal appeal process, and that's when PVSC's legal team gets involved. And those are the 3 levels of appeal for property owners across the province. I guess, the next slide is basically our contact information. One thing I will stress is I would implore any property owner to call PVSC and call the office and discuss their property assessment notice with an assessor prior to filing an appeal. I always encourage that dialogue between the property owner and the assessment office. And the staff are ready to receive any phone calls daily during the appeal inquiry period. And if you receive any questions from your constituents, please direct them to our office at the contact information listed below. Sorry. Oh, yeah, so I was just going to indicate below here, the 1-800 number is listed, as well as we've seen an uptick in the number of appeals, or the number of email inquiries that PVSC has received in the last couple of years. Just to give you an idea here in the box on the right there, it's during last year's appeal period, PVSC responded to over 10,000 inquiries by phone and email during the inquiry period, and the average wait time before speaking with a staff person was 16 seconds. So we have a contact center that tracks all the data relative to customer service there. And also on pvsc.ca, it's a very, very informative website for any of your constituents who may have questions and want to review finding an assessment, understanding your assessment, how to file an assessment appeal, and any other related assessment forms can be found on the website. And that's the conclusion of the presentation. So we are open to field questions.
Yep. Thank you, Madam Warden. Thank you for the presentation. I have just one question. What triggered the change in land use from forestry to, like, I purchased a lot. It's a big lot, and it was forestry. And after I bought it, they turned it into a resource. And I tried to appeal it, and they said, no, you're not allowed to do it.
Okay.
Yep. You want me to take that one?
Yeah, sure. Go ahead, Paul.
All right. How we determine what's considered to be bona fide forestry, well, we're not foresters, but we have to make the determination as to what's bona fide forest and what would be considered as exempt from taxation under forestry. So bona fide forestry, we have questionnaires that we send out to property owners to determine, if it's being used for forestry purposes, like actively forested purposes. So you think of farming, there's a commercial aspect to farming whereby you're harvesting and planting and growing a crop and so on and so forth. So that's the intent of the act, is that for an exemption or for a forest property to be eligible for exemption, that it has to be, you must be harvesting it or at least growing the crop and using, and employing silviculture type practices and those types of things, you know, keeping it thinned and making sure that, you know, trails are cut if, you know, depending on the size, those types of things. You're essentially growing a crop for a commercial intent to be harvested in the future. If it's found that it's not being used for a bona fide forestry property, then it may not be eligible for exempt classification, and it may end up being classified as forest resource as opposed to forest exempt. So did I answer the question?
Yeah,
On that
that
one?
makes sense, yeah. Thank you.
Okay, and for any further questions, Counselor Mitchell?
Thank you, Madam Warden. Just a question about the appeal process. Is there a cost to step 1, 2, or 3 to the owner?
No, there's not.
No cost? Thank you.
I have a question, if I could, seeing no one else waiting. Am I correct in assuming that your office is still only open 4 days a week?
Our office is open 5 days a week through the appeal period. Outside the appeal period, we have, you know, alternative works week schedule, 4 days a week with sort of telephone answering service that fifth day. But we're open 5 days a week through the appeal period. As you can appreciate, it's busiest time of year for sure.
Just checking,
Yeah.
because folks might not know what days to call.
Dion and I are both working tomorrow.
Counselor Musa?
Sorry, I missed it again, so I just want to mention to Paul that as per district, the growth happening in Mount Uniac is the highest in the here, so
Yes,
it's,
yes. The
I just
Uniac-
want to mention it to you, so,
The Uniac seem to be, yeah, right there for sure.
thank you.
And I think Milford, you know, the sort of the Mount Uniac, East Uniac, Milford areas seem to be growing quite, well, they're doing well, it seems.
Counselor Perry?
Thank you, Madam Warden. And thank you guys for your presentation. As always, it's a very good and well-structured presentation. In my district, there has been a lot of growth, but there's also been a lot of turnover with unfortunate passings of longtime individuals. And I've come to find out that a lot of people don't know about the cap transfer to direct family members. And I'm wondering if there's anything that you or the board is gonna take on to making that program well-known, because I did speak to a few people in the last year, and the property had transferred 3 or 4 years ago, and they went in and they did an appeal, and they were successful, but it only goes back to 1 year, right? Because it's a program that is not really well-known until you dig deeper in on certain things like that. And I'm wondering if there's anything that you guys could do in the next year to let that known, especially as a lot of people, whether they're downsizing, whether they're transferring properties, or unfortunately, in the events where a lot of these properties are changing hand based on wills, not through actual sales, if that process could be easier seen, rather than them have to kind of dig and find it or find out after the fact a couple of years later, because it does have an impact on that, especially when they're going through, in the cases of parents or loved ones passing away. It's part of the grieving process, and it's just one of the things that a lot of times gets overlooked because they don't have time to dig.
Yeah, of course, yeah.
Yeah, it's a really good point, and it's not something that seems to be top of mind in some of the sort of solicitors' offices when they're talking to family members or whatever. And, you know, there is a Form 1 devolution of ownership, or I don't know the exact form, and it's on our website, and we try to make it as apparent and everything and as we can, but it's surprising how many transactions do occur that we try to catch it, because we look at all the sales, all the transfers, everything, even if it's a $0 or $1 transfer. But if it's a Smith to a Jones, it's hard for us to determine if it's a family sale or not. And those are the ones that are hard to capture. If it's a Smith to a Smith, and it's a little bit different, it's a little easier to capture, but, yeah, in those cases. So, yeah, we're trying to, there's several things, or not several, there's a couple that's one good point. The other one is when a property sells and the new buyer doesn't realize that their assessment's gonna go up and they have a much higher tax bill, that type of thing. And so we're trying to educate on that as well, and we have training sessions that we put on to staff members from municipalities, regular sessions that can be done, and we talked to Nova Scotia Realtors Association. I don't know when the last time we might have talked to the solicitors around the province or whatever, but that type of thing. But for the one that is related to purchasing new property and didn't realize that their assessment was gonna go up and that it wasn't gonna be the same as the previous owner had a year ago, we did partner with the Association of Municipal Administrators this summer and sent out a joint letter to the Nova Scotia Real Estate Association Board saying, please be mindful of this and make sure that your realtors and clients of realtors are well aware of this.
Yes, no, thanks for bringing that up, because that was actually my second point, is because you're starting to see on different, whether it's MLS, whether it's Viewpoint, some of these write-ups that are being advertised for house sales, advertise what the taxes are on the house, but they're advertising a cap tax, not the actual tax for the perceived purchase price would be. And that's happening a lot, and that's what's causing a lot of sticker shock, and I guarantee it's causing you guys a lot of problems, because people are getting upset. 'Cause
Yeah.
I do know it's causing me lots of problems, because
Yes.
in the last year, I've probably got well over a dozen phone calls from people saying, I paid less taxes in Toronto or Halifax than I am here, and I'm like, well,
Yeah.
Yeah, you're absolutely right.
what was your house valued at then, right?
Yeah, you're absolutely right, and it can be a bit misleading from, that perspective. You're, looking to buy a home and
Yeah.
you're examining an MLS listing and it says one thing, but then, Scotiabank or RBC don't care. They just want their mortgage paid, and if, it comes back differently with a different assessment, once the assessor reviews the property, to Paul's point, then, the bank's gonna revise and send out a document that says, now you pay X, Y, Z, which is, understandably to your point, right? And to Paul's point, there has been a lot of education piece, like over the years CAP's been around for over 20 years, right? So we've done many education pieces, and it still seems that it falls through the cracks in certain areas.
Yeah,
It could be just individuals not educated themselves who are selling properties, or, the solicitors or what have you, right? But
Yeah, and I mean, it doesn't rely on you guys to do it all, right? It takes all those three parties, the solicitors, the real estate agents, and
Absolutely.
everything else to make it happen.
Yeah.
But it's just funny, I'm starting to see that a lot more in the actual ads for the home purchases on like Viewpoint and things like that, where they're talking about the taxes on the house, and it's
Yeah.
like, that doesn't jive. If you're selling a house for $700,000, your taxes are not gonna be $2,200.
yeah, because they'll show the listing price could be $750,
Yeah.
and then on Viewpoint, they'll show the assessment at $425 or $550 or something,
So
right?
it's just really not jiving.
Yeah.
But no, thank you, and I'm done there, Madam Chair.
Thank you, Counselor. Next to speak is Counselor Merriam.
Thank you, Madam Chair, and thank you for the presentation, very informative. Just to follow up on a question from Councillor Perry, I'm just curious, in the case of the homeowner is deceased, a family member ultimately, transition of title to that person. I'm just curious about the period to remedy if there is a faux pas and, they're kind of caught up at the market rate of assessment. Is each case just different? Have you missed the boat as soon as it's filed, done incorrectly? I'm just curious, is there a little bit of breathing room there typically?
It'd be on a case-by-case basis, but yeah, we can
Well,
We can do-
we can essentially go back 1 year,
1 year,
but it's,
yeah.
it's sort of 1 year from your, your tax year or whatever, so. If someone misses it by 6 months or 8 months or whatever, typically we can go back. But it's only for that 1 year because that's what the Assessment Act says.
Okay,
But, you know,
To have
and then it kind of falls into the hands of, does the municipality have a policy that whereby they can, but that's, I don't know. I'm not aware of any out there for that type of situation whereby it would be any type of tax relief or anything like that. But we can do it under the Assessment Act for essentially 1 year.
okay, yeah, no, I was just curious. Thank you very much. That's it, thanks.
Thank you, Counselor. Next to speak is Warden Ralston.
Yep, thank you. Just following up on that, and I understand the 1 year, but, okay, the family missed it this year. Someone tells them next year about it. Have they missed, like, is it 1 year from the time the property changed hands, or is it 1 year from when they apply for the relief?
It's the current filed roll year that we can work with. Like when the roll is filed, like, we're still working on the current filed roll year for 2025 right up till March 31st, just your calendar, kind of your budget year or whatever. So as long as, you know, if they advise us anytime up to March 31st, essentially, we can change that filed roll year 2025. That's what,
So I guess my question is, if Jane Doe inherited her mother's house in 2023, she did not realize that this relief was available.
Yeah.
And she doesn't apply for the relief till 2026. She can still do that, but the relief can only be granted back 1 year? Is that what I understand?
essentially, that one filed roll year, and
But she's
we-
not limited to a year after she got ownership of the house to apply. You see what I'm asking?
Do you mean, is it gonna be backdated retroactively
No,
to
no.
twenty
There's
twenty-three?
a-
I
going
mean, if
forward.
she got the house, all right, let's move about, she got the house in 2020.
Okay.
This year, her son came in and realized, oh my God, you're paying market value taxes on this house. There's a program, you shouldn't be. So in 2025, she fills out the form and makes the appeal. Is it too late? I understand that they can't take it back to 2020,
right.
but is it too late to make that appeal and get it, you know, the 1 year relief and going forward?
It can be done for that 1 year. They can appeal it, or they can call us at any time. They don't need to, they don't necessarily need to appeal either. If we got a phone
Yeah.
call in the middle of June and it said, look, I lost the cap, I shouldn't have lost the cap because it was a purchase and it was family property and et cetera, et cetera. We'll go back and take a look at that
Yeah.
and determine whether but we can only go back so far.
But
And then it goes
the
forward.
person is
Yeah.
not bound to do it within 1 year of having gotten ownership of the property, I guess is my question.
No, if they neglect it, they could phone us at any time and say, this was a family sale, and we can take a look to see if the cap would be eligible and how we would adjust that.
Okay,
So-
thank you.
That's something I could remind all your constituents of as well, is that you can call our office any time of the
Anytime.
year. Like, we're available any time of the year. We may not have like the staff available on phones as we do currently for this appeal period, I call it, but throughout the year, if you placed a call, or if one of your constituents wanted to place a call in August to discuss their assessment, then, you know, within 2 business days, someone will get back to that person who handles that general geographic area of assessment, right? So I would encourage property owners to do that as well, if they had any questions throughout the year, not just to wait till they get the piece of paper from PVSC.
Thank you. Next to speak is the CAO.
Thank you, Madam Chair. I just wanted to point out, council has a tax collection policy, and under that, it allows for some tax account adjustments and write-offs. One of the scenarios there is you've given me authority to, where we receive notice from PVSC that an error has been made, that they can't fix through some provision of the Assessment Act, as long as we get a letter from them explaining that the error happened, that this is what the assessment should have been under normal circumstances. Now, your policy says like duplicate assessments, deleted accounts as examples, but if we get a letter from PVSC saying there was an error, we can't adjust it, but you do have the authority, you've given the CAO the authority to do that. With the cap, it would have to be, like, you'd have to understand that each scenario individually and whatnot, but we do have that clause in your tax collection policy.
Next to speak is Councillor Dixon.
Thank you, through the chair. Okay, if an individual inherits property, they can go through the CAP program without any changes. If that person decides to gift that residence to a family member, how does that affect, is that privilege lost?
The cap privilege, you mean?
Yes.
No, not through a family transfer of
There's
ownership.
no limit how many times then?
And it has to be an immediate family
immediate.
member from, grandparents down to grandsons and then siblings.
Yeah.
In the breadth of it, so it has to be those immediate family members. Cap stays with property if it's an immediate family member and it continues on.
Okay, good.
And
Thank
just
you,
to
gentlemen.
reiterate, there's no cap on commercial properties at all. It's strictly
just
residential.
residential.
As long as they're eligible and meet
Under-
the eligibility criteria, but again, on the website is really informative on everything cap related. If anybody was wondering, any of your constituents, there's a lot of information on there.
And it's been in the media a little bit about why aren't apartments capped? Well, the legislation doesn't allow apartments over 4 units or more to be capped. Legislation doesn't allow it, but there is some, you do read in the media where they're talking about should we or should we not do apartment buildings for, because they're trying to keep rents down and everything else, but essentially, one of the eligibility criteria has got to be 3 units or less. So just small residential properties.
Great, thank you. Thank you for the report.
Thank you, Councillor. Warden, if you would just take the chair for a moment. Yes. Just to add to Councillor Perry's comments, I was late coming in, excuse me for that. The cap and the realty issue. An example of that is my daughter bought a house that had been owned for 45 years by the previous owner, checked on the taxes, the same as everybody, and then got a shock. And I really think that it needs to be tapped in at the Realtor. I know you mentioned that, but I would love to see more effort be made, because an additional $400 or $500 possibly, it was an over $500,000 house, can be, for some people, can make or break them, if they are at their limit. So I really think it's imperative that we try and get that to come in at the Realtor level, because the solicitor level, you may be too far down the road. Whereas the Realtor level is where you're gathering the information to decide. Maybe it'd be detrimental to the Realtor's sales, but I think that's the really important level to come in at. Thank you.
And I
Could
believe that's
ask
why.
everyone to make sure you've signed in on your thing? We're short somebody being signed in.
And,
Thank you.
and certainly that's why the AMA and PVSC decided to, correspond with the Nova Scotia Realtors Association, because they're the ones who are talking to the property purchasers and buyers. And I know in the case of my house, when I sold it, they just wanted a copy of our previous assessment and tax bill. That's not gonna apply.
Exactly.
It's gonna be new, so, anyway.
And also too, during the pandemic years when the market values of homes like exponentially grew, it seemed like there were so many new real estate agents coming on. Everybody wanted to sell a house because it seemed like it's an easy way to make a side hustle to make money. So you had a lot of inexperienced realtors maybe out there who didn't even know that that's what was going to transact once they sold the property, right? And I've had endless conversations back 15, 20 years ago when I was doing residential reassessment, for the Peninsula and Halifax, endless conversations of what you're talking about, right? And there always seemed to be that stopgap between, and that was when cap was relatively unknown, but now it's been around for 2 decades or more. You would like to think that there was more of that education piece for everybody involved in the transaction, right? Because ultimately, PVSC is not the ones selling the homes, but we are the ones replicating market value for the municipalities, right? So it's almost like the end of the line by the time that the sale comes through to our office and one of our assessors examines 20 or 30 sales in a market area, right? So, yeah.
Yeah.
And we both get the calls. That's the unfortunate part. And the counselors and they get stopped in the grocery stores and everything else. And yeah, been there.
Next to speak is Warden Rolston.
And just following up on that, I don't know how you fix that, because I almost think it would have to be from the Realtors Board or something.
Absolutely.
Somewhat, something that is mandatory.
Yeah, it almost
But
has to be
they
built
do-
into that
it has to-
disclaimer sheets and everything
It
else
has to
whereby,
be a rule that
Yeah.
they must follow, because I know, between 10 and 15 years ago now, one house that one of my brothers bought, and a
yeah,
very senior real estate lady, and look, the taxes are so low, and I said, no, I'm sorry,
Yeah.
but that's not right. Well, what do you mean? And I gave her
Yeah.
a lesson on the cap, but she had no idea, and there's not a lot of, impetus for them to do that, because it's not going to help to sell a house to tell people their taxes are
Yeah.
going to double. So I think
I
you
was-
folks and us and anyone else can
I
give
was
them all the
thinking,
classes but I do think it should be some kind of a regulatory thing within the real estate industry.
I
And
was
one other,
thinking, I was just gonna say, I was thinking about that exact thing is how could it be done better? And after a presentation last week, that exact same situation that you had described, a son had purchased property, and it's very tight on their mortgage financing and everything else, so it could be quite crippling. And anyways, the only thing I could really think of was on those disclaimer sheets or disclosure sheets, why isn't there a box that says, I have disclosed to my client, the purchaser of this house, that the implications of the cap and taxation and everything else. One extra line in relation to that, at least you got somebody ticking a box saying they disclosed it, whether they did or they didn't. Gives them, but
I was just gonna say, one thing I think about also is that at the end of the line, the individual sitting across from a banking professional, right, who was going to be, determining whether or not the affordability is there and that level of threshold for affordability. But yet, what's the buy model and discussion being, had about the assessed value versus the sale price, right, at that time, right, historically. So there's a lot of hands involved, and, the unfortunate situation does happen annually with individuals buying homes, and assessments get revised, and
I
here we
know I
are.
should be ashamed of myself for charging them those taxes.
Okay, well, seeing no one left to speak, thank you for your presentation, the little bit that I heard of it. Sure, it was great.
great, thank you all for having us, really
thank you
appreciate
very
your time.
much. And good luck with the budget deliberations. I know how difficult they can be.
I have some Timbits on the way up.
Oh, God.
Yeah, thank you.
Thanks. Thanks a lot.
I was freaking out as it was, but never.
I don't want.
Thanks.
I got a haircut today too.
For budget.
The federal government might get budget shoes, we get budget haircuts.
Okay, next item on the agenda is overview of budget topics, dates and process. I haven't even had any.
Yeah, yeah. Thank you, Madam Chair. So, I'm gonna start off talking about the operating budget tonight, and I'm gonna start with the actual document itself, as you can see up on the screen. This document is actually the public document. It's used to show the public what we are doing from the perspective of the budget for the upcoming fiscal year. It's also used by yourselves, council, in your deliberations. This document is what I would call a high-level overview of our revenues and expenditures within the municipality. It's not deep in detail. It does show all of the various tax rates that are going to be set or changed in here. I would say that this is a starting point for you as council. We've brought it together with what we thought would be a good starting point for you to start your deliberations and look at all the details. And as you look at all the issues and make decisions about changes that you want, we in finance will take note of those and keep track of them. And then when we get to the very end of the process, we'll incorporate those into the final document that will make all the changes for you and public to see once you've made your final decisions. There's, when I look at this document, I think there's three important pages in particular. It's page 17 is the first one. I'll just slip to that. Here it is here. And this summarizes all of the municipality's operating revenues and expenditures in everything. The GTR, the USR, the fire departments, everything you can think of, with the exception of the water utility operations. We budget for that separately, and it's a separate topic in our budget. It gives you a very good overview of what we're talking about as far as revenues are concerned. You can see there 56.6 million, and the overall total expenditures of 56.6 million, giving you a balanced budget. It also provides you with an overview of year-to-year numbers. Previous years, we were looking at 51.1, both revenues and expenditures. And you can see there it does have projection numbers. Those are not completely up to date, but it's heading in the right direction, $550,000. That's a reflection of both the GTR and USR numbers year to date. So that's showing us slight, about $500,000 surplus at that point in time. But again, those aren't completely up to date. But what's that? Oh, I was, sorry. Oh, sorry. Yes, you're right. Page 8. Thank you. Yeah, good. Now I'm going to go to page 7. Oh, sorry. I do want to mention, though, that this page, well, it's a summary page. The following several pages after it kind of break down all those various expenditures by the groupings that you see in here, you know, like council and corporate services and everything. But again, it's a very high level type of analysis, not into the details that you might be more interested in. But when we get into the business plan document, which we hope will start next Thursday, it does provide more details as to some of these numbers, which, you know, I think will help you understand some of the, especially the variances year to year. So that's an important page in this document, but another page I consider quite important in this document is the overall tax burden. That is page 17, if I can find it here. And I think that's it, maybe. Total tax burden, including area rates. And I think this is an important document because it reflects from our residents, our businesses, what's the impact to them after all of the changes that are going to be made, the assessments, which we're assuming in here it's capped at the 2.6% level. But all of the GTR, all of the area rates, the wastewater fee, everything's in here, and it gives you a good idea of, an average normal person in whatever area we're talking about on the left-hand side, and the market values you're talking about, or assessed values, I should say. And what does that mean? And as you can see, this is the all-inclusive tax burden. And it shows you the percentages, which, most of them are under 1.5% at this point in time, but this is just a draft. You might make changes, it might raise it, it might lower it, we don't know. And the dollar value. So I think that is a really important page for you to be aware of. And the next page I think is really important is, of course, the tax rates. So that is on this document, page 19. And that summarizes everything from the perspective of the GTR, the USR, all the various area rates, all the fire levies, everything's in here. And when you finish your process and make decisions about how those rates may not change, or may change or may not change, this will reflect it, if it's an increase and a decrease. And it's very helpful for, especially for yourselves, but also members of the public to look at that. So this, in my mind, is the top 3 pages of this document are really helpful for everybody to get a handle on what's going on. Of course, there's a lot of information in this document. I don't really plan on using this document to talk about further things tonight, because what we've done is we have various slide presentations in PowerPoint, and we've extracted a lot of this information that's in this document. We're going to put it, and we put them in the PowerPoint, and we'll focus on those things. I just want to take a second and just talk about this document. It's
Excuse me,
yeah,
Warden Rolst would just like to make a comment.
yeah.
I'm finding page 19 a little confusing,
Page 19. Let me go back
the
down to it.
comparative tax rates.
19. Okay, so 19. Yeah, page 19.
But it's
This is-
showing an increase of 1 cent on the general tax rate, and that's not what I understood we were going to be seeing.
No, it's minus 1 cent for RCMP, minus almost a cent for
Okay.
provincial, and then plus 1 cent for residential, so.
Oh, yeah,
It's just a
I see how you
breakdown.
see it.
Confusing.
Yeah, it is. You're right. I understand that. At the end of the day, yeah, they're summarized down here as well, that this is showing, this draft moves from 79.5% of the GTR to 78.5, and the commercial rate is going from 2.57 to 2.56, so,
I
yeah,
guess,
I get what you're saying, yeah.
I guess the confusing part for me is what is included in the part of the GTR that's increasing? If it's all split out like this, what's driving that, what's included in that portion of the GTR?
Everything except RCMP and education. And what else is in provincial? PVSC.
So in other words, it is savings on what our mandatory provincial payments that's helping us out here, not the things we have discretion over.
No.
Do you understand where I'm coming from?
Not quite. Kim, do you
Well,
get it?
okay, the entire tax rate is showing a 1 cent reduction.
Right.
And that 1 cent reduction is coming, I understand, from reductions in RCMP, reductions in education, mandatory provincial transfers, that sort of thing.
Mm-hmm.
But even with those 1 cent reduction in those provincial numbers,
Mm-hmm.
we're still seeing, in order to get to that 1 cent reduction overall, it's still showing a 1 cent increase on the portion of the general tax rate that we perhaps control. We have no control over what we have to pay RCMP,
No.
education.
No.
And those numbers are such that we're paying less, which is a decrease.
As a percentage,
Yes.
but they're still increasing.
Yeah, they're not,
I don't know how to explain what I'm asking. Does anybody else understand it? if we're getting a 1 cent decrease in the tax rate. And that's because of the provincial amounts,
No,
no?
no.
So.
Go ahead.
So your general tax rate, the only reason you have this split out between the three of them is because this is how we show them historically on the tax bill. You've got three separate rates that make up your 79.5 cent or tax rate. So what this tells me when I looked at it, it was that the assessments have grown such, and compared to the provincial funding and the RCMP, that those two components make up less of a percentage of your overall budget than they did before. Which would, so they will be less of the general tax rate than they were before.
That's correct.
So but next year, once your new assessments kick into your uniform assessment, that will change again. It's a timing game with uniform assessment. When your assessments are going up significantly, that will impact that education rate, but it'll impact it next year. So you've got large assessments this year over a smaller assessment rate. Next year, it'll look different again.
I understand that, but I'm still struggling with the idea that our assessments have increased enough that the cost for the police and education and that are less of a percentage of what we have to pay, therefore a lower, if you translate that to a cents tax rate, a lower amount. I understand that. But conversely, with those increased assessments, the other part of our taxation, which is shown here at the top for residential, resource, and commercial, even though those assessments have increased, that tells me that our other expenses have increased to the amount that we're raising the amount of taxation we have to charge to get that. So we're getting our 1 cent tax reduction based on provincial savings.
I don't agree with that comment, Kim.
Yeah.
Well, that's what the
It's-
numbers tell me.
That is for this year. Yes, your RCMP, we've assumed went up by 6.5%. Your assessment growth, including your new development, has gone up by 11%. So that is going to be the case if you don't add new RCMP officers or you don't, so that is always going to be the case. If you look back through the years, that number might be increased if your assessments are less than your RCMP cost increase, and it will be less. But overall, your general tax rate is what we work towards. And in this budget, you'll see a lot of transfers to reserves for the general tax rate, things that aren't necessarily our expenditures, but they're transfers into those reserves. So I think what Wade's saying is, no, our expenditures didn't necessarily go up, but our transfers to reserves plus our expenditures have gone up. You're gonna see in this budget, there's huge increases in our operating expenditures across the board when it comes to things like power and insurance and, things like that. So I think once we get through the document, you'll satisfy yourself or not that there's places you can.
I understand that, and that's what I'm trying to get to, that the expenses that we don't control them, but that we control
Yes.
more so than the others, have gone up enough
Yes,
that even with the increase in assessment, it required an increase to cover those. But that increase was balanced out because that high assessment allowed a lesser amount towards RCMP education and that. And that's where the savings this year are coming from.
right.
That's what I'm trying to.
My only caution to that would be that your mandatory provincial funding will be higher next year because of your high increase in assessments this year.
Yeah.
And we've seen that probably 5 or 6 years ago. as a percentage, it went down, and then the next year, it was like $1 million more than it was. It
And
was-
that gets into the whole uniform assessment
Absolutely, yeah.
conversation and everything, which we have lost that battle year after year after
Yeah.
year.
I wouldn't want people to think that our mandatory provincial funding is going down,
No.
because it's not.
But I just had to reconcile that difference within my own mind as to what it meant. Thank you.
Okay, we have a few counselors on to speak. Counselor Musa?
Yeah, I was wondering on the same thing, like, well, like as a warden, it shows a decrease in, like, cents-wise for the RCMP and the provincial funding of 2 cents, and an increase in our 28.66, which our general tax rate residential by 1 cent. So the reduction is coming, I don't want to say from the decrease in the mandatory taxes, but from the overall, but most of it is because the province didn't take that same percentage as last year. Is that how you?
Those costs have not increased to the same amount that the assessment has, but they will next year.
Oh, no, yeah, I'm trying to understand it, so, of course, they increase, they're not gonna give us a break on anything, so they increased, but they didn't increase enough to cover the whole, let's say, 32 cents that we had last year, so it's only cost 30 cents for the increase, right? That's how you can say it? Let's say last year, the mandatory was 30 cents, 32 cents. This year is 30 cents, is more money, but is less in cents-wise, right? That's how you explain it?
It's more money than less than cents, yeah.
More money and less in cents. So that's where the decrease is coming from those 2 cents decrease, and we increased ours by 1 cent. So the difference is 1 cent decrease. So that's how you explain it. But we're gonna get to that extra cents that we have on the first line. We're gonna see where it's coming from and through the budget, right? Okay.
Well, through the budget, you'll see where the overall 1 cent decrease is coming from,
Okay.
all the different variances.
Okay.
You're not going to see a number that says, here's the 1 cent increase, because that's not how the budget is set out. You will see where all the increases are, and you will see where the decreases are. But your RCMP and your education, you won't see those decreased. Because they're increasing.
Oh, the money-wise increasing, but cents-wise they're decreasing.
So
Okay.
several $100,000 increase in your RCMP, but over your increase in assessments, it actually is less per $100 in assessment that you need to.
Okay.
fund that.
Okay. No, it's clear now, yeah. No, I get it. Thank you.
Is that all, Counselor? Thank you. Next to speak is Counselor Tingley.
Through the chair to staff, just a question. You mentioned reserves. Can you tell me approximately what the total amount that is being transferred to reserves approximately?
Well, Counselor, I'm expecting that we're going to get to that.
Can I ask the question or?
Jordan, do you have the number?
Go ahead, Jordan.
So in front of me, if we're just talking general, oh, I'm not in the document, I'm in my own thing. Let's see. The general tax rate transferred to reserves, that is totaling 353,000. In terms of, yeah, okay, actually on the page you're on currently right there, because I'm looking at a different document right now, but the number that I'd be referring to actually would be your $407,000 there, that would be the all encompassing,
That's a net number,
yeah, net number.
to and from.
No more questions at this time.
Thank you, Counselor.
Yep. That's it.
Next to speak is Counselor Perry.
Thank you, Madam Chair. I just request that we go through presentations in blocks before we have questions, because questions coming from different parts of the document that are gonna be covered later on is just, I believe, a waste of our time. If councilors have a question on something, you can write the question down and then ask it at that appropriate block. Otherwise, we're gonna be here for an exorbitant amount of time if we keep going out of sequence, asking questions on items. It just does not make any sense. It's not a logical way to do it. Thank you.
Well, I guess we need to decide how we want to go forward with this. If we want to go so far into the presentation and then have question periods, or if councillors want to be able to ask questions as they arise. How do you want to determine that?
I think when they arise, we should be allowed to ask.
Actually, I go through the process. The reason I chimed in. Through the chair, the reason I chimed in is other people were speaking, but I agree with Councillor Perry. I'd just go through the process, write our questions down and ask them afterwards. I think that would be more efficient. That's just my thought.
Go ahead, Wade.
Yeah, Madam Chair, so I was going to mention, actually, my next comment was gonna be that, I think, it would be great if councillors felt free to ask questions as we go through this. There's an awful lot of detail to go through. We're gonna be here for several meetings. But yeah, it's gonna make the whole process more interesting and educational for everybody if councillors ask questions they have. But I agree with what I've heard here is that perhaps it should, at that point, be relevant to the topic that we're talking about at that point in time.
Warden Rolston.
Just a suggestion, and I mean, in my defense, the question I asked was on the page we were discussing at the time. I feel that it would be appropriate to ask a question while the sheet is, and what's being discussed is ahead of us. But I do think that we've worked well together, council and staff, going through these budgets for a number of years. And I think if councillors ask questions that staff feel could be easier answered and explained in the section we're going over next, I think it's quite fair that staff would just say, I understand your question, the answer to that will become apparent on page such and such as we go through the budget. If it's not, could you please, ask at that time or something like that. I think we can make it work. Thank you.
How does that sound to you? Okay, that's what we're gonna do. Councillor Rhino, you were on?
I was gonna give my opinion, but I guess
Okay, go ahead.
Okay, so as I was saying, this is a starting point, this document, for you to make decisions based on what you hear and see during the budget process. My own thought and recommendation, but it's just mine, is that perhaps it would be good, council, to hear at least the overview of the operating budget before you decide to make changes. That's just my thoughts. It'd be pertinent to kind of see the big picture first before you make changes, but again, just my thoughts. So I'm gonna switch over to the slide presentation that we have and bring that up here. Maybe. Oh, okay. There we go. So this is a typical slide presentation that pretty much everybody has seen here before. Everybody's been through one budget process. So there are some changes, but it's very similar to what you have seen in the past. I'm gonna go through it with what I think are the pertinent comments on each of the page, and, if there's questions about them, that would be a great point to ask them. As you can see, the header here is that we're gonna start talking about several different budgets. This is everything that we're gonna talk about in all the budget processes: the operating budget, the business plans, the capital budget, and the water utility budget. We've got 6 dates set aside at this point in time, starting tonight. 1, 2, 3, 6 dates, 2 hours each, 7 to 9. We may use them, we may not use them, we may need more. Time will tell, not sure. As I've mentioned in the past, the budget process here at the municipality is pretty thorough and quite involved. We start in October with staff, finance, and the directors and the managers, and we start going through the numbers and drafting sections and revising, and at the end of the day, it kind of comes down to a point in time when we sit down with the CAO, probably in December, and then we really starts to come together. We kind of take that, and then we kind of, throughout the month of January, bring it together after we've got the roll numbers from PVSC. We can bring it all together, and we can put this draft together for you here late January, and we'll be going through probably the most of February with these meetings to talk about how would you like to proceed. So it's involved, a lot of people involved, and we're looking at a 5-month time frame here, beginning to end. 5 or 6, yep. There's a lot of topics that we have to talk about. The draft operating budget, the draft tax rates, draft business plans, the adjustments as we go through it, and council members want to adjust it, we'll keep track of those. Joe's going to present on the DRF and community grants. We're going to have Scott and Alana talk about the sportsplex, various issues there, ongoing both in an operating perspective and a capital perspective. We need to go through the Housing Accelerator Fund allocations. Those, we have to address those soon. We'll talk about the variances from budget year to budget year. There's an issue, household hazardous waste we'll talk about. It'd be good to have Andrea here at that point in time. I think Adam would like to talk a little bit about ground search and rescue. We're going to look at the waste management fee. We're going to talk about the fire department levies. Councilor Perry brought up the issue last night on snow clearing services and business parks. We're looking at those. Human resources report, 26/7 staffing, and then the big things that we leave towards the end is the 5-year capital budget and the water utility budget. Those are normally towards the end. At the end, we should have 4 documents: the operating budget, the operating budget for the water utility, the capital budget, and the business plan. Okay, so just quickly, just for a reminder that from our residents and our businesses' perspective, what do they see at the end of the day from their process? They see that we here after council has made their decisions about the tax rates, staff get together and they prepare their bills, normally being sent out around late March, and it's due June the 1st with 50% of the previous year's bill. And then the final bill is issued in July or August, due October 1st, and it's the actual calculation of the remaining portion of the whole assessment. So that's what they see. We talked about PVSC already. Won't continue on with that. It is 2% cap this year. Pass on that. We do have not just the normal revenue from assessments. There's a variety of other very small numbers that come in compared to everything. It's the forest properties, the wind farm tax, the farm property or acreage. We get taxes in lieu from Crown land, federal and provincial. Those are relatively small, though, in the big picture of our revenues that come in. The general tax rate, what does it cover? What does it pay for? It covers a wide range of things: RCMP and other protective services, animal control, EMO, hazmat, building inspections, regional libraries, PVSC costs, all the administrative staff that you see here in the various departments, economic and business development, the parks and recreation, aquatics, library, park development, community grant, planning and development, roads and operations. There's a whole host of things that the general tax rate pays for. The waste management fee. Waste management fee is a general expense. The waste management costs include waste, recycling, and compost. We have the Waste Management Center, and it covers operations, debt, environment monitoring, post-closure costs, reserve transfers, household hazardous waste programs. And the current fee that is being charged is $230 per dwelling unit. I think within the list of topics that we had is the whole issue of the waste management fee. We want to kind of bring that forward, show you some of the numbers of what's going on in relation to that. And there may, if you decide, be some room to perhaps lower it a little bit. But we'll talk about that. We'll bring that together and have a special session for you on that. Area rates. Of course, you know, area rates are charged just based on assessment for the services relating only to that area. They're accounted for separately, and the rates include the urban service rate, there's streetlights rates, there's the sportsplex rate, the Mount Uniac recreation rate. Then there's this urban service rate, covering things like streets, sidewalks, hydrants. There's contributions to it from outside serviced areas for streetlights and sidewalks, and the wastewater management fee, which is based on water consumption, not charged to homes in Milford because there's no water service. And that has not changed. There's no proposals at the moment to change that in the draft budget document. You've heard a lot previously tonight about the whole CAP program. This is reiterating that whole issue of the CAP, the situations and that the CAP program causes for municipalities and taxpayers. And as you can see at the end of, or for 2026, there's a taxable assessment loss of 1.4 billion. And that would equal 11.1 million in tax revenue at 25-26 rates, which is about 25 cents of the 25-26 proposed, or the 25-26 tax rate. So this is just explaining that if we could move away from this whole cap rate, what would the actual rate be for the GTR? It would move from 79.5 to 54.5, and that's pretty darn significant. Go.
Councillor Rhino?
Thank you, Madam Warden. This gets me every year because I hear the same thing. Yes, if we went on market value, with assessment on market value, yes, it would be significantly lower, the tax rate. But yet, the taxes would be based on the current market rate, so that people will be paying just as much or more, a lot more, doing that. So I think to me, this gets to me because it's always pointed out, well, we shouldn't remove it. That cap was put in there for a purpose to help protect people so they could buy homes and it wouldn't be put on their homes. And yes, there are things that should be tweaked in that cap program, and I'll be the first to admit it. But if we ever lost a cap program, I don't know what's going to protect the taxpayers out there, because they won't be afforded, a lot of them won't be able to afford their homes.
The CAO would like to comment on that.
Thank you, Madam Chair. So just for any public who's listening, to make sure that we have consistent information going out about the CAP program. Councillor Rhino is right. There are people who will pay more if the CAP program was eliminated. But there are also a lot of people who would pay less. And the people that would pay less include anyone who has no cap on their home, be it seniors who have downsized, young people who have bought new homes. They are paying 25 cents. They are paying on market rate assessments. And right now they're paying 25 cents more than they would otherwise per $100 of assessment. So the argument is yes, back several years ago, there was about 50% of people who would pay more if the cap was removed, and about 50% who would pay less. It's changed since then. You can see the number of capped properties you have is significant compared to the total. So now the people who will pay more, or are paying significantly more. So, on a 79-cent rate, you're talking almost a third of their tax bill more than they would pay if you balanced it back out to market rates. So I'm not saying it's a good thing or a bad thing. I think the numbers have to be looked at if we were to go back and look at removing the cap province-wide. I don't think you could remove it over, I think the last scenario was 13 years. I think you probably have to do it over 20 or 25 years so you don't have that rate shock. And you would have to have something in place that protected folks from increases in their assessment. But I just wanted to make sure that everybody understood there are significant amounts of people who are paying much, much more than they would if the CAP program didn't exist. And there are a significant amount of people who are paying less taxes because the CAP program exists. But the program itself does not protect everybody from rising assessments. Thank you.
Well, respectively, well, I say this every year about the CAP program. Kim, you say the same thing every year about how to protect. So it's tit for tat every year. I don't agree with you, and we can't always agree. And I think the CAP program needs to be tweaked to some, but it needs to be left. Thank you.
Well, it wouldn't be the budget without that conversation.
Okay, so.
I'm sorry, Councillor Perry would like to weigh in.
Thank you. Where the provincial government has made it very clear they're not gonna touch the cap for their duration, I believe any cap conversation during budget is just wasted time. Because the program is not gonna go anywhere, it's not gonna change, and until such time that there is conversations about that, I think sometimes the information just causes confusion amongst the public. And I personally would like to see the whole cap conversation. It's reviewed by PVSC every year in their presentation. I don't think it needs to be in our budget until such time there's a change in attitude of the provincial government to come forward with another system.
Okay.
Because it's just, we have the nice conversation between Keith and Kim every year, but there's nothing gonna come out of it. There's nothing we can do. I just don't think it's relevant. Thank you.
Thank you, Councillor. Next to speak is Councillor Musa.
Well, I disagree with both councillors from before, because if we don't have this information, how are we gonna lobby the provincial government to change their mind? So it's just information, so we can see what's going on every year, how the CAP program is working, it's working bad, it's working, how are we gonna advocate for something if we don't know how it's affecting our residents? We're not changing anything here. But we have got some more information, not for debate, just for information, and someday we can find something to lobby the province to do something. Like, how are you gonna pass that information if you don't know it? But that's how I see it. Thank you.
Thank you, Councillor. Next to speak is Warden Rolston.
Just say, I would agree with Councillor Musa, because at any given time, we don't know when there may be a new councillor or councillors discussing budget for the first time, or a member of the public listening to budget for the first time who have no idea what the cap is. So I do think there's room for some cap information. Just my comments.
Thank you, Warden. Councillor Perry.
My whole point about the discussion was the cap conversation is covered every year in PVSC's presentation, outlining the numbers, outlining the changes, and outlines everything. We are duplicating the effort here in this presentation that was given to us earlier by PVSC. So the councils will receive the exact same information on a holistic view, and it would probably save staff some time and effort, and as well as us for being here to talk about it yet again when we went through it in the PVS presentation every year. Thank you.
Thank you, Councillor. Go ahead, Warden.
Well, through you, Madam Chair, I would respectfully disagree, because the little bit more in-depth discussion that we do in this forum relates directly to the numbers specifically as they affect East Hants.
It's in their presentation too, board.
This is much more detailed. But I would suggest that, you know, I don't mind listening to it. I think it's useful information to have. Thank you.
Okay, Wade, I think we're ready
Sure.
for you again.
Okay, great. So the next slide is actually, again, PVSC information we just heard. A little bit different, though. This is actually showing our percentage of assessment increases net of the bylaw exemptions and how it impacts residential, resource, and commercial. As you can see, significant increases in residential, 11.45%, resource, 9.65%, commercial, 23.2%, overall, 12.2%. Very significant increases. And you can see the bottom line numbers, those are in excess of what we saw last year as well. Now, the next couple, 2 or 3 slides, I think we're going to have Kim talk about them. Is that correct, Kim?
So councillors, one of my favorite things to talk about is new assessment. So when you look at your budget, you're looking at growth, as we discussed before, of 11.4% for residential. So that's about $300 million in new assessment on your roll. The next slide, which we're not, I'll just talk about it before we go to it, outlines where that where some of that new assessment has come from. So about 158 million of that, or 53%, is from building permits associated with residential construction. If you'll recall, a couple of years ago, we used to have a report from PVSC that broke down building permits for residential and commercial and what impact that had on our roll. And it's not perfect, so they can't actually sort of pull it out specifically, but what they've given us is sort of the indicator amount. So they're indicating to us that about 53 or 55% of that 300 million is from building permit growth on your roll. So that is really significant, and it's indicative of what you're seeing in some of your communities for residential growth. This slide says new properties are 37.6 million. Those are actually like properties on a map. So where a property has been subdivided, and then that new subdivided property, which has a new assessment number, now has assessment associated with it. That's about 37.6 million. That would also be in that new building permit growth for the most part. Some of the property part wouldn't, but they're in the next slide as well. So the numbers you're seeing here, we're sort of slicing and dicing them in different ways, but the new sort of subdivisions of properties accounts for about 12.5% of your growth. The existing properties, which again, 26.3 million, 158 million of that is from building permits. So that's that 289 new dwelling units that you'll see on the next slide where those come from. That also includes the cap of 2.6%. And then it includes the sale of properties where properties have been removed from the cap. And then that difference between their market and the capped value have been added to your roll. And some of those are fairly significant. I was trying to do a comparison sort of before PVSC gave us their data, because they had to sort of mine it a little bit. And some of the properties that went from what I thought was a building lot to a brand new home were actually just sales under the CAP program. So they were assessed at less, like, 100,000, 120,000, what our building lots are now. And then they went up to 500,000 or 600,000. And when I went to a map to look at them, they were actually homes that had just been sold that year and came out of the CAP program. So that's the significant impact that the sale of those properties that are coming out of the CAP are having on your roll growth. one of the things to keep in mind when you look at that tax burden and the whole tax burden, you know, some of those dollar values, your $500,000 properties, they're paying $86 more than they were last year in the all-in tax burden. Those are, because you've got such a high percentage of your residential accounts that are capped, you can assume that most of your properties are gonna see that $83 increase in a $500,000 home. That takes into account the cap increase, any increases or decreases in your rates. But what that doesn't do is, that is not what the average person who might have bought a home last year, they're still paying a significant amount more based on that 25-cent amount. So I don't know who's driving the slides. Are you
Me.
driving? Go to the next slide. So this is the taxable value attributed to building permits, and we'll fix that spelling mistake when we get there, Councillor Mitchell.
Can I just let Councillor Dixon
Sure.
chime in?
Thank you. Just a quick question, I guess, for the CEO. When you talk about new permits and that, does that include like major home renovations?
Yes.
Would that come in under that? Okay.
Yeah.
Thank you.
That's any time a building permit's been issued. What they were able to do is go through their role, and any building permit issued, they've sort of captured the uptick in what that associated.
It would create a new value in the whole
Yeah.
project. Okay, thank you.
Yeah.
And
So-
Councillor Musa as well.
So you could have part of that property capped and also part increasing because of the new
Okay.
building permit.
Okay, Councilor Viny's opinion.
Councillor Musa?
Thank you, Madam Chair. Can you go back, please, to the, so the last line, 10,495 from 10,181. The cap went up, but probably went up positively, not negatively, because most of the properties that was sold last year or something, they came up with the cap, but the cap is way higher than it was before. So if you have a property cap 2 years ago for 200,000 and was sold for 500, the new cap is improving way more than it was before. So it's not a bad news. I won't say it's a good news. It's okay news to me. Like the increase is not that bad. I just want to see if I'm thinking right or not.
Yeah, so the increase in the amount of properties in the cap accounts, that's kind of a mixed bag between this year, last year, and probably even the year before, depending on the increase.
Yeah, but I don't know if I'm thinking right, but that increase is mostly from new build that just came under the cap,
Right.
or the property sold 2 years ago and just came again under the cap. So this cap is a good news to us than staying the same cap 2 years ago.
Yeah,
Is
they will stay in the cap program. There are some houses that won't get into the cap program for several years because their market assessments might not go up by cap.
Yeah.
So it's really like plus 308, it's really not indicative of a whole, like of something specific, because every home is a little bit different.
Yeah, but for a new home, if it's assessed for 600,000, the cap is gonna be close to that 600,000, right?
Right.
Yeah, so those probably the most one that came above that what we have.
Right. They're entering the cap program.
Thank you.
So when we look at the next slide, again, these are not hard and fast numbers, but they're indicative of where your growth is and what's happening. So you can look at your two Lance districts account for 29% of your growth in building permits. Your two Uniacs account for 26%. Your two Enfields, 18%, and then you've got Belknap, 9 Mile River Belknap, which is 13%, and then the others sort of fall into different buckets there. So, I mean, you've got growth quite a bit through your Uniac and your corridor area from sort of Milford up towards Lance, to Enfield, Grand Lake. Some of the other areas, not so much in building permits, but but obviously the more residential areas. What you're seeing in Lance is primarily the growth in Councillor Miriam's district, in the subdivisions there. And again, the same thing in Councillor Moose's district. So those bigger areas account for about 86% of your growth in building permits. And then the 158 million is spread across the municipality. We go to the next one. So then we go to the commercial ones. I think there's probably a little, I don't know that these numbers are entirely accurate when I look at the building permits for Elmsdale, for example. The commercial building permits that we have, and again, like the gentleman from PVSC mentioned the other day, or earlier on, things that are built sometimes are under construction. So there's been much more building permits than 2.1 million for commercial issued in the Elmsdale area. We've got about $10 million in 2025, but some of those may be under construction. So it's hard to say at what stage they're in, but that number to me looks a little bit low. When I go down to the next obvious number to talk about in Mount Uniacke, South Rawdon, those are primarily, that $13 million increase is 3 properties. One that has been renovated from an old commercial use to a new commercial use. That was about $2.8 million uptick of that. The large commercial entity in the Mount Uniacke Business Park is about 9 million of that. So that's, Atlas was under construction last year. I believe they're fully constructed this year, so their assessment is at 19 million, where it was at 10 on last year's roll, which was a large part of that uptick. And then there's one more property on Alicia Scott that was about 2.8 million, or sorry, 1.2 million of that growth from building permits. So, that speaks to the investment that you're making in your business parks. Certainly, without the infrastructure investments that you're making in that park, you wouldn't be seeing that growth. So I think that's sort of what council was looking for when they started, when we got into the business park business. And that is certainly paying off in some of those areas. So of the commercial growth, so $48 million increase in commercial assessment. Of that, 17.5 million is commercial growth from building permits. And to me, that's really important, because when you start to look at where that growth is coming from, it's important to realize in your growing community that in order to get that growth, both residential and commercial, you need to increase your services. So if you were looking at that number and you had a $48 million increase in assessments, but you had, say, $1 million of it was new construction, then you're probably okay just to, provide the same services and carry on. Same with your residential. But when you see those numbers where, 36% of your new growth in commercial is because of new construction, that comes with a responsibility to provide more services. So with that, you're going to have increased revenue, but you will also have that increased service that you're required. And you see that when you do the assessment reviews of all your new developments. And we say sort of the net new impact on your bottom line is X. But that takes into account all your snow clearing services, all of your RCMP services, like anything that we're assuming that you're going to put towards servicing that new growth. So when, Councillor, or Warden Rolston, asked earlier, like our expenses are more to service, to provide the services we do, that's part of the reason. Because you have $148 million worth of new $58 million worth of new residential growth, and you have 48 million, or $17.5 million worth of new commercial growth that you then need to provide services to. And many of the building permits that have been issued, or the growth that's going to happen, especially in the commercial side, hasn't started yet. So these numbers will continue to be really important as you look through your next 4 or 5 years of budgets and see how much of that new growth and new revenue is coming from that growth. It also comes with additional expenses, and I think people need to make sure we keep that in mind as we go through the budget. You can see it really directly when you say, we have $158 million worth of new residential building permit growth. Well, we also have maybe 9 kilometers more of sidewalk to clear in the wintertime. We also have another 9 kilometers worth of road to clear, or whatever that number is. I can't pull it out of my head, but you have to account for that as you look at this, 11.6%, yay, we've got all this growth, but it comes with additional, when it's new growth, it comes with additional expenses. So as Wade has mentioned earlier, the commercial rate in this budget has been tabled at going down 1 cent for the commercial rate, and it's been tabled to go down 1 cent for that residential rate as well. Do you want to go to the next slide?
Okay, just a couple of councillors would like to speak. Councillor Tingley?
Through the chair, this is why I asked the question about the reserves, is we're talking about this increased growth that's gonna cause future expenses. And right now, we're receiving a ton of income, and I'm just wondering if we can be slapping more into the reserves. I'm just explaining why I asked the question at that time. I don't need to get into any further discussion at this time.
Thank you, Councillor.
So through you, Madam Chair, we have put significant amounts of dollars into reserves for some of the things that we know that council has made a priority, because you will have to spend the money, and it is because of new growth. So you will see that as you go through the document. It will be pointed out in the variance analysis for each segment where we're recommending that more money be put into reserve, and they're all around sort of those growth areas of transportation and buildings and whatnot, so.
Next to speak is Councillor Musa.
Thank you, Madam Chair. I don't want to repeat what I said yesterday, but you see where the growth in my district coming from. It's all from one subdivision. And I drove on that subdivision today on the main road, which is Municipal Road, and almost 1/3 of the road is not cleared yet. So I don't understand how people is going to accept what they're paying here. If they look at here and they say most of the increase in taxes coming from them, and not getting the services that the other part of the municipality is getting. We're not asking for more. We're asking for the same treatment. So I think something should be done, and it's common sense. Like, they're paying a lot of taxes, and they're getting treated not even equal to the other part of the municipality. That's unfair. I just want fairness here,
And I think, Councillor, we made the motion yesterday.
We made the motion, but I want to, like, the number are speaking, because when people complain about their taxes, they're right, they're paying a lot of taxes. They're like, they have the most 500,000 and up homes in that subdivision. So we gotta treat them fairly. They're not asking for more, they're asking for fair treatment. That's what we call service, and we have to provide that service. Thank you.
Thank you, Councillor. Go ahead. CIO.
So the next slide is something that we generally put in the budget every year. Next one. This is a list of the top 10 commercial taxable assessments that you have in your budget. I will point out the corridor community options, number 5 on the list. It is taxable assessment, but if council will remember, you've put them into your bylaw F100, so they get an exemption equal to that. So one of your budget line expenses is your tax exemptions, and that would have been part of that increase. The rest of them sort of just an idea of where some of the heavier investments are for our community. Some of the ones that 10 years ago would have been at the top of the list are now not even on the list. So some of our new investment is really taking shape, and, you know, this is for information. We can get council a list of however long you like of the commercial assessments. It's certainly significant in some areas of the municipality. So I think I'll turn it back over to Wade.
Thank you. So next slide is information. It's regarding the dwelling units, and it's giving you the dwelling units by the district. As you can see, top number of 79 units was in South Uniacke, and the next one is the 51 in North Lance, Milford, 6.
I'll just let Councillor Perry speak.
Thank you. I was looking at that list that was just previously up with the businesses, and, you know, I know Screen Nova Scotia came out of nowhere because they bought a facility and they've done heavy investment, and that's gonna continue to increase. But one of the things that I found was interesting is that Elmsdale Lumber was on the list last year into this year, and their increase is less than CPI. It is a 0.2% increase when CPI was way higher. Yet I do remember us allowing them to do improvements on that property and do things on that property in the last year and run some things. So I don't know how their assessment would stay so low if they've done assessments on it. And we talked about this in the past, and I'll use an example in my community. The Mount Uniacke Irving is assessed at $300,000, right? And there are other places around here in the corridor that certain restaurants are being assessed at, 1/3 the much of like maybe a dentistry office or a veterinarian clinic. Do we have the capacity to go through our commercial listings and go to PVSC and ask them to reevaluate some of these businesses that seem to be getting huge tax breaks in their assessment? Because I just don't think it's fair when you have other similar businesses seeing $400,000 or $500,000 a year increases, and they've done nothing to their property, just the properties around them keep growing, and you have other major companies, and it's only because they were on the list that I caught it, an Elmsdale Lumber, that we did allow them to run trials and do certain things, and they were doing improvements to their yard, which I know if you do an improvement on your house, you end up getting a higher assessment. So I'm just wondering if we have the capacity to go through our business listings and kind of identify ones and go to PVSC to look at, make sure our commercial counterparts are paying their fair share with the residential. Thank you.
CAO?
Thank you, Madam Chair. So, not to specifically talk about any accounts in particular, but just in general. So when you look at a business, specifically industrial businesses, when they do, what renovations or change their processing, that's typically machinery and equipment. Like there's not, unless there's something physical that they build, or if they make changes to their yard, you're typically not going to see that show up in their assessment changes. I don't know specifically about Elmsdale Lumber, whether they had building permits out this year or not. But again, it might not be complete either. It might be still under construction and only partially assessed. The other piece about commercial is there's different ways to assess commercial. So sometimes it's based on the revenue, sometimes it's based on physical property. So depending on how that particular business is assessed, those types of activities might not change their assessed value. There's something else I was going to say. And again, the commercial properties aren't subject to cap. So if, there are times when, and if they appealed last year and got their assessment reduced, that wouldn't have shown up in your budget documents, and it would, so maybe their assessments did go up, but it was based on an appealed value that is different from our budget document last year. I don't know if that's the case at all in this case, but that could be, like you do see quite a discrepancy sometimes in commercial roll to roll, not realizing that there's been an adjustment in the billing side that can happen anytime between now and sort of the end of September.
Is that all, Councillor Perry? Councillor Mitchell? Oh, okay.
Thank you, Madam Chair.
Oh, sorry, Councillor Mitchell, that was my mistake. I'm just, Councillor Perry wants to respond there, so I'll just let him.
Well, because what brought to my attention when I looked through some of these properties is you have these businesses that are well-established and you know they're all making money and they're assessed less than a single-family home,
Oh, right, that was the other point.
right?
So-
So that's the idea is they're on a property size larger than a single-family home. They have a building that's larger than a single-family home and they're economic enterprise and they're assessed for less, which doesn't really make sense. Thank you.
That was my other point, Madam Chair. So, yes, the answer is yes, we do go through our roll. We do go to PVSC and ask them if these assessments are correct. Again, not to point out any specific business, but when something is what looks to us like erroneously assessed based on what's around them, we do pick out those things and send them to PVSC. That's where it ends though, because we are not assessors and we have to assume that they're going out and assessing based on however they assess. And sometimes you look at the roll and say, well, that's just not right. But they are the assessment experts and in particular, again, without calling out any businesses, but we have not had the Elmsdale Lumber didn't have any building permits last year. Or the year before, so. Whatever they did, it would have been through machinery and equipment, I would assume.
Okay, Councillor Mitchell, go ahead.
Thank you, Madam Chair. Getting back to Councillor Perry's questions and concerns, I talked to Paul Beasley about the exact same thing before the meeting this evening, and he says, according to lumber mills and farms, the buildings are assessed, but not the equipment inside the buildings. They don't go inside. They assess from the outside, and if you could drive through the valley and see 4 chicken farms buildings one year and 6 the next, and they just add the buildings. They don't actually physically go inside any of the buildings, which affect any farms in East Ends or Elmsdale Lumber. So that's what he told me, so I'm just sharing that.
Thank you, Councillor. Okay, just want to note that we have reached our scheduled time of adjournment. CAO, would you like to finish up wherever you're comfortable?
I think we're good here. I'll just do the next slide and then finish up. This is, again, just more information in relation to the dwelling units. It's covering the individual districts and the year-by-year increase, and that's it. And I think we should, I know people have got to get on the road, so my opinion is we should probably wrap this up for tonight and keep on next Thursday night.
Okay, so our next budget meeting is next Thursday night at 7 p.m. And be looking for a motion to adjourn. Okay, the meeting is adjourned.